Hi there everyone, good morning and welcome to this edition of The Market. I'm Avanne Dubash, with me Anisha Jain as well as Ajaya Sharma. We're all in red. Are we prophesying what the market could potentially look like?
No, actually we are preparing for an amazing Christmas actually.
Okay, that's the positive spin to it, but at least the markets aren't looking all that red. It was pretty flat is how you could describe it in yesterday's trading day. The 19,800 mark was maintained, but we really struggled to hold on to that level with conviction. It wasn't a move that we surpassed quite comfortably at all. And it has been 4 straight weeks of advances for the frontline index, so that's positive. You've also got the volatility index or the VIX, which has declined, and there has been quite a bit of interest in the broader universe as well. Banks seeing a little bit of a rebound, and the small cap index has snapped its 3-day losing streak. You've also got sectors like real estate and even rate sensitives like auto, which have managed to hit record highs. And interestingly, Ajay, even if we're looking at the overall trade setup, the fact that FIIs and DIIs both have been buyers, I don't know if this is really a trend to go by, but encouraging.
Actually, yesterday's market, if you see, if you put Nifty aside, which is struggling, and for the 7th straight session that we are looking at Nifty, which is finding it difficult to take out the 19,850 mark, the rest of the market is very active and very interesting to trade. Banks came back. The entire bank Nifty took a bad hit. Remember, RBI took corrective action as far as consumer loans are concerned. SBI, RBL Bank, AU, all of them were dragging the market. Banks came back and almost ended at the day's high. It was just the Nifty which was struggling. So it is not that the entire market was not very active. And Nifty too, if you go deeper, some auto stocks which were helping Nifty for some time, after IT stocks which were helping the market, all of them went through some amount of unwinding. So Nifty was range bound at best, can't read much into it. But the rest of the market was very good. Look at how chemical stocks yesterday came back in unison among the broad markets. I don't remember when I saw Navin Fluorine, Deepak Nitrite and many other insecticides, India pesticide, there was a massive up move as far as chemicals are concerned. And this is telling you that market is hunting for value. This is the beaten down area of the market. Also sugar. There's a drought news and sugar stocks. So broader markets was very fertile for trades, and so was Bank Nifty. Just the Nifty, thanks to IT and some amount of insurance unwinding, was struggling. But overall, things look okay. Even the FI position, if you look at the market and even in Nifty, have been after making a low of almost 13%, FIIs have come back and long positions are around 21-22%. So it's not a weak market. It may be, if you are a compulsive Nifty trader, you will find it difficult to trade because there is some amount of unwinding pressure around 19,850 for sure.
Yeah, it's a bit boring at the index level, but beneath the surface, not boring at all. A lot of ideas in the broader markets and a lot of ideas in the primary market as well, because that seems to be getting a lot of spotlight and a lot of attention as well. And that is underscored by the kind of subscription that we have seen within a couple of days of opening itself. So IRET, of course, closed yesterday, but it saw a massive subscription of 39 times. And that tells you that the overall bids that came in for IREDA was around 83,000 crore rupees. So that's the kind of overwhelming response it got. Similar can be said, Ajay, for Tata Tech as well. Already 15 times subscribed, already seeing bid of around 45,000. But the question is now, A, the retail participants will not get a lot of subscription. And secondly, looks like all of these stocks are going to list at a bumper premium. So what to do after that is a big question.
There's a third angle. Unmet demand perhaps maybe, driving the stocks even after the listing. Yeah. But IRDA, I'd like to, spend a moment out there. It was, blowing the top. 84,000 crore for a 2,000 crore IPO. So clearly, very few will actually get it. But there is frenzy building up for power financiers. We saw how REC PFC have doubled in the last 6 months. But this is a unique one because of the green financing angle. There's no other company. So probably that could be the reason. And also, green financing may attract a lot of foreign institutional buying interest. Because this time, I was reading even COP28, which is kicking off next week, the climate change event, which starts in Dubai next week. The main agenda for COP28 this time is green financing. So FIIs will also find it, and institutions may also find it interesting. So even after this kind of subscription, perhaps buying may come. Tata, we've been talking about it to guests on the channel for almost a week now. Anisha, everybody is finding it inexpensive versus the peers. So I'm not surprised we see a bigger number. But even for that matter, Gandhar oil or Flare, they are not extremely unique business models or technology-backed new age businesses. But the point is, intelligently priced IPOs versus the peers are seeing good response and good listing gains. So that is the larger point I'd like to, the entire investment banking ecosystem as well as the promoters, whoever are leaving value on the table, massive response, goodwill for the management, and of course gains for investors.
And yeah, that's what we have seen with the recent ones, right? Whether it was a Senco or with that Pugalia and the engineering companies, wherever there was value on the table. Yeah, and even RR Cable for that instance.
RR Cable was very, very inexpensive at 48, 50 times though.
I mean, look at the peers, right? I mean, they're comparing themselves with the likes of Havells and stuff. So that does, and now the valuations have become even more punchy. So.
Well, speaking of like recent listings and these kind of reactions, Honasa as well yesterday was unmissable, right?
I mean, I just couldn't get my head around what exactly happened there.
I mean, it was the results, but it didn't command that kind of reaction.
You guys spoke to the management, right?
Yeah.
Was there something out of ordinary?
I think one of the things that market missed is the fact the way operating leverage will kick in. So, yes, there is 30-35% growth that they're promising. Margins have already expanded, but there's a scope of further expansion, and all of that top line will suddenly get built into the profits because of that margin kicker. So, I think that was something in a couple of discussions with my analysts and, other market friends. That's what came out, and they're expecting that today could be another day of a gain there. And very interestingly, Jefferies has made changes to their model portfolio. They've replaced Marico with Honasa. So that's another thumbs up coming.
But every time I look at Honasa, the only two words which come to my mind is by Ashni Grover. Quietly and handsomely.
Yeah.
And the stock moved up quietly and handsomely yesterday.
Wasn't quiet at all. I wouldn't call that a quiet move.
Ajay,
quiet in the sense that suddenly it moved out and nobody was talking about it.
Yeah, fair enough. So yeah, that was, and speaking of the Jefferies strategy, that was one stock that really stood out. But then here are some of the other changes that have been made. Power Grid has been replaced now by NTPC, and as Anisha flagged off, there's another one, there's Maruti, and that has been replaced by Eicher Motors, with the rationale being that the two-wheeler demand is now going to outpace passenger demand over the next 2 years. So that is the expectation. But other than that, they've added Coal India, saying that there's very strong volume growth trajectory, and India's strong economic growth is another factor. And they've shifted their overall weight from NBFCs to the True Blue HDFC Bank and ICICI Pru. In terms of the overall portfolio as well, Jefferies is talking about the near-term macro concerns having abated. They've raised cash tactically in their model portfolio, strong earnings growth as well as what they're anticipating, and valuations look quite reasonable. And Ajay, this is something that we've been talking about, right? Jefferies is not alone in this India call talking about how the strong macros and earnings backdrop is looking good.
In fact, we'll talk about the macro part once again. Just a month back, S&P actually came out and said that India GDP growth may not dip the next year as much as people are expecting. In fact, they called it, I was talking to Ramdev, he only brought it to my notice. He said, did you know S&P is expecting 6.9% growth even for next year for India? Which earlier it was expected to fall to 6.4 or 6.5. So indeed, the next year earnings picture is looking pretty good. Your crude is under check. Tax collections are very buoyant. So if the macro concerns clearly, I mean, these are the only concerns we have always had. Earnings growth and crude and all of that appears to be under check. But rural is weak. Now, is rural coming back? Maruti has been replaced by Eicher. Okay, two-wheeler demand is likely to outpace passenger vehicles. This is interesting.
Yeah.
This is interesting.
Yeah, so they're talking about Power Grid being replaced by NTPC, as we flagged off, and then of course Honasa. Just a quick check-in on the global markets. Do remember US is closed on account of the Thanksgiving holiday. For this morning, you've got the Asian markets. It's a little bit mixed. A lot of economic data coming out of Japan, so that'll be closely watched out for.
Yeah, but since we're talking about the Jefferies strategy note, let me bring on board what Chris Wood has to say in the Greed and Fear note as well, because they have made quite a few changes to the Asia portfolio as well as the India long-only portfolio as well. Now, they have removed Bajaj Finance from the Asia-only fund. They've allocated 4% weight to JSW Energy, and the investment in Zamata has actually been further increased by 1 percentage point. Even if you look at the long-only portfolio, the investments in JSW Energy, AU Small Finance Bank and L&T has been increased by 1 percentage point, and Bajaj Finance, ONGC and RIL has been reduced by 1 percentage point. A couple of interesting things there, Ajay. JSW Energy, one would have thought that on account of leadership transition, they'll perhaps wait on the sidelines and make this change maybe later. And secondly, of course, at the time when public sector entities, especially these oil and gas companies are doing well, they've actually reduced the weightage now.
So yesterday, let's talk about oil and gas. All these oil marketing companies in particular I was talking to a lot of fund managers. This was the only space in the entire PSU side of the market which was cheap. PSU banks, not an area you don't know about. BELs of the world, capital goods, railways, defense, everything is identified in the market and a run up. The only place which was trading at sub one time book in some cases and around one time book and very cheap was OMCs.
But
So it was a valuation trigger which got played out. I'm very skeptical about. We'll talk to our techies also about it. Historically, OMCs have always been point A to point B story. They have not been a 5-year, 10-year play whole story. Will that change is my question. Right now it is working because it's cheap and now it's getting normalized.
Yeah, but the only risk I'll put on the board is the regulatory environment. Like suddenly yesterday we got the news that HPCL needs some money to fund their capex and ONGC might have to do rights issue for that. So, I mean, you're funding one through the other and...
It has always been like that.
Yeah, exactly.
I mean,
So that's the risk factor. Correct.
That's why they never got Aramco valuations or ADNOC valuations. I mean, that's the thing. But I must say it's very cheap.
Yeah.
And every now and then you get very nice trading bounces. And all of these are F&O stocks, right?
Yeah.
You can
So
easily get in, get out, do your trade and
helps you
move
to
up.
make money in short spurts, and I think all of this we'll discuss with our chartists as well. I think Kunal and Naresh are ready to discuss their technical analysis on the market right now. So Kunal, let's begin. Banking space saw some sort of a fillip yesterday. Would you give credence to it at all?
Absolutely, yes, Anisha. In fact, yesterday's move was probably an indication that the gap which was created on the banking index, I think a couple of weeks back, when the Bank Nifty had touched 43,000 out mark, that was the first point where the gap got filled. And we've seen historically that over the last 1.5 odd month of this rally for the markets from the October 20 lows, is that whenever the gaps have been partially filled and not completely filled, it's actually resulted into the Bank Nifty making a fresh swing high for itself over the very near term. So keeping that into perspective, I think 43,000 is an important support for the Bank Nifty. We are just hovering around those levels. If we don't break below those levels, we could be at a point where a 1,000-point rally or a recovery for the Bank Nifty could be something in the offing.
Okay, we didn't even wait for Kunal to wear his specs. We jumped into him and got that question going. But Naresh, in the meantime...
Are you checking the right index on your chart?
Because there's absolute clarity.
So you don't even need them. Okay, let's find out if there's clarity on the frontline index. Naresh, because we're talking about this, the fact that there was so much more action in the rest of the market, but the frontliners were rather dull. In particular, I'm talking about the Nifty index, hovering around that 19,800 mark, and it's never really crossed that level with conviction.
So finally, we could be on the verge of that over the next, say, 2-3 sessions wherein we cross 19,800 and test that 20,000 mark. Because we have started seeing the first indications of a recovery. We saw Reliance Industries make a 2-month high. We came very close to a 1 to 2 month high for HDFC Bank. So one by one, we are seeing that recovery happen. We've seen some recovery in the large cap IT space. So overall, the bias is positive. The momentum could get positive in the heavyweight space over the next 3 sessions is the view.
Okay, let's get those top trading calls going as well. Kunal, hope your specs are on now also. And take us through what it is that you're betting on the charts.
So I'm betting on a few mid-cap names and so for example, yesterday there was fresh breakout candidate, ABFRL. That's a stock which I'll be betting on from current levels. I think it's an interesting breakout, price volume breakout for the stock, about 220 plus mark. So would suggest a buy with a target of 236, revising the stop losses hard to 222 for ABFRL. And RT Industries is also another stock which is completing a double bottom breakout on the charts, above 530 levels. So would suggest a buy with a positional target of 600, stop loss at 500.
I have a quick follow-up on that one since you touched upon it, Kunal. In fact, entire market was reading it, looking at it, but were equally confused whether to participate in it. And that is the rebound of chemicals. After 4 years, and there have been sporadic rebounds in, say, UPL, SRF around the results. But what we saw yesterday was slightly different. So I want your opinion on it and which one to bet on. Yesterday we saw SRF come back. Guys, if you can pull up Naveen Fluorine, SRF, India Pesticide, pull up Deepak Nitrate, saw 4% kind of up move. Many others were also doing very well. So it was a kind of a big synchronized up move. Can one say with certainty that chemical stocks are bottoming out, or one can't say?
No, I think with certainty we can say that the chemical stocks are bottomed out. And I think it's not just yesterday's price action, Ajay.
Okay.
I've been tracking this over the last 2 weeks, specifically. SRF is something which I do track closely. So there was a point where these stocks rallied up by a 5-7% margin. So last expiry, October expiry, these stocks ended at a major low for themselves. multi-month, multi-week low individually. So Naveen, Fluorine, SRF, etc. Now what started off initially at the start of the fresh expiry November series was a series of short covering. So that took the stocks 5% to 10% higher from their previous basis. Then there was a consolidation for the stocks. And even in this consolidation, there was no price retracement. It was just a time-wise consolidation, some whipsaw in between for the weaker hands to come out. And yesterday was a sign of a fresh breakout yet again, and that too happening just 1 week prior to the expiry week. And I think that's a very strong sign that going into the next series as well as end of the fresh current series, there should be more long positions as well as exiting of short positions into the chemical stocks.
In fact, not only on the charts. Why I'm trying to join dots here is that in the last 10 days, there are 2 fund managers, PMS guys, Abhay Agarwal of Piper Serica, who's added Sharda Cropchem and UPL in their portfolio, and even our own Marcellus. Saurabh Mukherjee has added Naveen Fluorine. He was talking positive about chemicals right now. So appears to be some kind of things coming together.
Yep, it certainly does, and we'll discuss that a lot more with our fundamental guest. But Naresh, in the meantime, let's find out what you're picking out on the chart, some of your top trades.
So first is the buy on Reliance Industries, which has taken leadership in the heavyweight space. Expected to see follow-up, a 2-month high done, and slowly and steadily moving up. Should go towards 2,500 in the next 2-3 sessions. Stop loss at 2,370. Second is the buy on Container Corporation. The whole logistics space has started breaking out. The smaller names have also. Container Corp has come close to that breakout about 750 and consolidating around that area for the last 4 or 5 sessions. So the breakout has done. A follow-up action should happen over the next few sessions. A stop loss at 735 and a target price of 800.
Okay, point taken. But you know what? We were talking about the rebound that we saw in the banking names yesterday, and this is something which is just related to that. We were telling you earlier that it's not going to go down very easy with the NBFCs, the RBI Risk Weight circular that has come in, and now we understand that the NBFC body has actually reached out to RBI to probably take a relook at the kind of sharp increase that they have made in their circular. Ankur has picked up this for us. Let's go across to get more details on the story. Hi, Ankur.
So, the Association of NBFC, that is FIDC, has written to Reserve Bank of India. And one thing I would like to clarify here, that there is only one part of Reserve Bank of India's circular which has been requested by FIDC to be considered by the regulator. That is the bank loans which are given to NBFCs. So in the defense of NBFCs, it has been said that since NBFCs cater to MSMEs and NBFCs cater to the sector where banks also cannot reach sometimes, therefore it will affect that part of the credit growth. Apart from that, the association has also said that the intention of increasing the risk weight assets is, of course, to enhance the scrutiny. That is all welcome, but the problem here is that it is going to increase the cost for NBFCs and as well as source of funding. So all in all, it has been said that that it would redirect the credit flow towards the capital expenditure and aid a greater degree of funds towards meeting the working capital needs. That should have been the idea. But however, the Reserve Bank's direction needs to be reevaluated in the opinion of NBFCs, and they have requested Reserve Bank of India to restore the risk weights which were earlier for bank loans which has been given to NBFC. So that request has been made to Reserve Bank of India. Now it will be up to Reserve Bank of India to decide that whether or not to cater to this demand.
All right, thanks very much, Ankur, for those details. In fact, let's get a move on then and focus in on some exclusive news around the market of coupling of power exchanges. Now, as the Power Ministry is mulling regulatory aspects, this is what we understand is in the works, the government's intent of coupling of power exchanges. We've got Prakash Priyadarshi here. Prakash, what exactly are you picking up from your sources?
Yes, we're learning from our sources that the government is looking at various regulatory aspects before implementing market coupling of power exchanges. We're given to understand that the Power Ministry is of the view that it's a very positive development for this sector in the long run. Therefore, government is moving ahead with the previous plan. Sources are saying that it is very unfair to say that the government has put on hold this whole proposal. However, it will take sufficient time to understand the legalities and all the aspect around it, and based on that, future course of action would be decided. When it comes to implementation of this whole proposal, we are given to understand that the government is planning to implement this proposal by next year. But before that, all the legalities and the aspects around it will be examined. Also, the consultations and the discussions that is taking place will be taken into account. An objective behind this whole proposal is to provide level playing field to all players, and uniform price across power exchanges is something which will help government to increase overall electricity trade at power exchanges.
Point taken, but just wanted to put on board what Axis Cap also has to say on the company IEX. They've just written a fresh note and they are saying over 60% of the stakeholders are not in favor of coupling. The ball, of course, is now in CARC's court because the Ministry of Power is also mulling, how to kind of implement this in the best way possible. However, IEX is confident that coupling implementation would be a long drawn affair, even if it happens, and they'll get enough time to kind of transition into this new model as well. So that's the latest coming in. The stock has been holding up well, and in last week itself we have seen a bit of a run up on this one, though Axis Cap for now maintains a sell call with a target price of 110. But on that note, slipping into very short break, don't go anywhere. A lot more stock specific ideas lined up for you.
Okay, so let's move on and talk about ITC, because there are some cigarette related channel checks which are happening, and Vinny's got more on that. Vinny, tell us, what do you gather?
So absolutely, in terms of what BNK Securities is highlighting, according to the channel checks, that cigarette volumes for the company will see a reasonable 5 to 6% growth in Q3, and this is despite the high base that they've seen. So on the higher base also, we're expecting good growth in cigarette volumes. They have been doing much better than what we saw during COVID levels. So obviously, better cigarette volumes expected to still continue for the company. Margins for the cigarette business also expected to remain strong and improve sequentially as well. Other than that, the FMCG business also is expected to see good growth as well in terms of the margins, and mainly due to the expansion that is in terms of the cost management initiatives that the management has taken. That will be something that will be supporting the margins also for the FMCG business as well. Seasonally strong quarter obviously for the hotels business in Q3, so that will be supporting the growth there for the company. They expect a 10% growth in Q3 from ITC, and Q3 promises a double-digit growth rate is what BNK Securities is highlighting. They're maintaining a buy and a target price of 585 rupees per share for ITC.
Thanks for that, Vinny. Meantime, let's also put the spotlight on another heavyweight, and that's Axis Bank. They conducted their analyst day, and a lot of brokerages have reported some of the key takeaways. So let's find out what they are. We've got Lisa here with all the details. Lisa?
Right, a slew of brokerages have come out with their report on the back of Axis Bank Analyst Day. So let's start with Jefferies. They have, first of all, Axis Bank is a top pick in their coverage, and they have a target price of around 1,250 on Axis Bank. They have highlighted that what the management said, 18% ROE with better asset quality bodes well for the company. And the recent circular, the RBI circular, also has a limited impact on the company. Moving on to Macquarie, has a neutral target on Axis Bank. They say that the quality of deposits that has improved, and they are also looking to increase the price of consumer as well as the NBFC loans, and this is to pass on the risk weight impact. Well, the price increase that will not be immediate, but it will be gradual over a period of time. And also they highlighted that the cost ratio that may remain high in the near term. Moving on to CLSA, even they have come out with a note on Axis Bank. They have kept the estimates rating as well as the target price unchanged, and what they have highlighted is that GPS strategy is on track, and they are also emphasizing on the partnership, GPS as in the growth, profitability as well as sustainability. And what is a key driver for the company is Bharat Banking, and also deposits will be a focus area for Axis Bank. And lastly, even Motilal Oswal has a bullish note on Axis Bank. The key focus for Axis Bank is on delivering the digital journeys, and it's establishing itself as a robust customer acquisition engine. Well, they expect a 4 to 6% higher growth than the overall system, and also the cost asset is likely to moderate by 2%, and that is by the exit of FY 25, and Axis Bank is also aspiring to deliver 18% ROE as highlighted earlier. So these are all the brokerages. They have a bullish or positive view on Axis Bank that will be in focus today.
Excellent. Thanks very much for that, Lisa. In fact, I ran into and then we had a small chat. Mr. Chaudhary was there in Sri Lanka, by the way, chilling. And I said, well-deserved break. He said, yeah, I haven't been out with my wife for a vacation.
Did you quiz him true journalist
But this
style?
guy is doing such phenomenal work. Everybody got surprised by the way numbers in the last 2 quarters by Axis Bank. Yeah. And now they are guiding, they're openly telling the street that I'll outgrow the industry.
Yeah, and by 4
cost,
to 5%.
4 to 5%, a huge margin on that book, right? And then costs will come down, and what excites me most is about the Bharat strategy.
Yeah.
The deeper penetration part. No wonder the stock is at $1,000. Sanjeev Hasin is also here. Sanjeev, look at last 6 month chart. Can you pull up the last 6 month or 1 year chart of Axis? Sanjeev, good morning. Thanks for your time. Any thoughts? The way Axis Bank has come back to $1,000, people have focused on HDFC, ICICI quite a lot, but this one quietly came, has done pretty well.
Yeah, good morning, Ajay. I think day before yesterday, that was my top banking pick. In fact, I stressed the need that the Citibank wealth business is a huge money earner. And like you said, I think Amitabh Chaudhary has balanced the book excellently. Being a man from the insurance, he has been conservative. He has promised but over-delivered. And for once, he is now talking of bullishness on the credit growth. So I remain very, very optimistic. This is one of our top holdings also and top picks also. And I think this is definitely headed higher. So maybe, it will outperform all peer group large banks. And it has. And I think it will be more steady than any other PSU private sector bank. So in our order, it is Axis Bank, it will be ICICI, and it will be HDFC third in the large cap banks. But that and some of the mid cap banks are looking very, very, attractive at this price.
Sure, point taken. Naresh, I actually wanted a chart check from you on Cipla as well. Do you think it's poised for a bit of a recovery today? Because there was a note that came in from AMSEC and they had a slightly different view. They are talking about how Albatross, manufacturing has already shifted to one of the facilities in the US, which is already US FDA cleared with 0 observations. Now, of course, they are not fully sure whether that particular unit can handle all the Albatross volumes or not, but they are hopeful that if this scenario does play out, they're expecting a very limited impact on the company's profits. In fact, they're saying the earnings cut would be limited to just 0.8% in FY24 and 2% in FY25. So the question is, was it a knee-jerk reaction yesterday, and will we see a recovery today, Naresh? Anything on the charts you can, crystal gaze for us?
So technically, the stock was actually on the verge of a breakout, and it almost gave a breakout and was sustaining there. And this news actually came as a surprise, and that's the reason it has seen a little more of a reaction on a single day. But over the last 3 months, 1130 has been a support. That was the big 1130, 1120 was the big gap up move also in August. So I would expect that to hold. So any fade off towards that mark is where one can actually one can keep a stop loss below 1130 and go long at current levels also. But the recovery will be slow and steady, because we've seen whenever there is a negative news and a big down day, it does not recover rapidly for pharma names. So in this case, one would expect a slow recovery towards 1270.
I think I'm stealing Ajay's question now because he's been talking so extensively about this chemical stock. So let's get in a take from you then, Sanjeev. What do you make of it? Kunal said he's been tracking it for the past few months or so. Yesterday was that synchronized move. Are you seeing merit in this?
Yeah, good morning, Avanne. Recall a month back, I was putting my money and my, head out on SRF at 2150. And it's now moved up very smartly, but that and Deepak Nitrite both will deserve action. You can add an Atul over there, chemical. I think they are all three looking extremely good. That whole chemical basket is looking very, very good, specialty chemical particularly. And SRF takes the lead. It's the largest player which provides to Bayer and other players. And their, some of businesses along with the nylon cord is doing extremely well. So we are overweight on SRF in this basket. And we've had an ad on our dark horse play over there from 470 has been Aarti Industry. We think all bad news is in the price. That stock could be a relative outperformer.
We need to talk about is QIP coming from a transformer maker and a cable maker, which is Apar Industries. Pull up the longest chart you have, and you would see that the kind of value this stock has created. Now the stock is in news because of a QIP, and we understand that they are aiming at increasing their medium voltage cable division capacities as well. There's a lot of demand coming in from America mainly. So there's a QIP which has been launched. Management usually doesn't talk to media, so you wouldn't see them talking, but analyst calls at best. Power transformers, I'd say power related ancillary stocks as a as a whole, Sanjeev. What are your thoughts on here on this pocket and APAR in particular? At 5,500, a QIP will be lapped up for APAR, I'm assuming. Do you like APAR or any other in this space?
So I like one of the most hated names, which has been a huge wealth creator, BHEL. You can't but have power transformers and BHEL not being there. See, the biggest weakness for BHEL was the Chinese imports over the last 5 years, which in the last 2 years have gone away. So the China one has actually been BHEL's savior. The stock from 25-30 rupees has rallied all the way up to 150. I don't rule out even 180 coming on that part. Like you said, APAR is a market leader in that will gain. But look at the other players, in that whole transmission generator. I would go with a share called Ingersoll Rand. That has a very good pedigree. It's an MNC and it is related to power transformers. So that could be one of the dark horses which can still make more pay. But as a disclosure, we own BHEL in our portfolio. And, like I said, sometimes you have to be contrarian and look 2 years in ahead, because that is where the real money lies. BHEL numbers were, weak, but the quarterly guidance on the next 1 year order book is 4 times this book. So I would go with a buy on BHEL on declines. APAR is, I think, will be get oversubscribed because this is the hot theme on power transformers.
Sure, point taken. The other hot theme that we have been seeing in the market has been the pharma sector. Just wanted to put on board the thoughts coming in from Bernstein, because they are saying that the US generics pricing as well as volume have improved. The acute season was a bit weak in the quarter gone by, but from Q3 they're expecting a bit of recovery, and margin tailwinds is also something which is there for the sector. Having said that, they're not expecting a big earnings surprise to happen in the near term. They are saying that pretty much the valuations are at the higher end of the long-term averages. They do like Cipla, Oro, Biocon and Gland, but they're less constructive on Dr. Reddy's, Sun and Alkem, and in fact they're expecting some sort of correction in Lupin as well as Divi's. Mr. Bhasin, where does your preference lie within pharma, and anything if you want to specifically talk on Cipla?
So Lupin and Aurobindo are two stocks at much lower level, but we've been very, very bullish on these as contrarian plays. On Cipla, look, Anisha, all bad news will be bought in this stock. It's like Hero Moto, you kept hearing about Pawan Munjal and XYZ, but all opportunities were buying. Hero Moto is today at a 2-year high or a 3-year high. I think Cipla, there is more than what meets the eye. Don't go by the FD approvals. There is talk of, change of ownership or something like that. That could be the one reason this stock is driving high. I still think it's in the best business it is, because Seriflow has gained more market share in Europe than ever before, and their local businesses are doing well. So I would still rule out any major correction in Cipla, and that would be a large cap. But Anisha, I still reiterate for investors, buy the SBI Pharma or the Nippon Pharma Fund. It is better to trust a fund manager because you are not so privy to generic and pricing. And if you bought a basket of stocks, you will do very well. That index, by the way, has tripled in the last 4 years.
No, fair point, Sanjeev. That's perhaps the right way. And why restrict yourself only to pure play pharma when you're getting diagnostics now, you're getting healthcare infrastructure companies. So might as well make a basket and do your work over there. There's also one stock which is in focus, Home First Finance. Almost 9.5% equity. Exchange hands yesterday. There was a big block deal. The stock attempted a rebound but didn't. Now the data shows, bulk deal data, that some smart guys have bought that stock. And remember, this is a company which is kind of the RBI circular doesn't really impact them because they are in home finance and housing was excluded from the circular. But stock was under pressure. Pull up the longer chart. Home First Finance, have you analyzed this company? I think yesterday True North and some others offloaded some stock, but the numbers, if you purely look at, stock has been lackluster, but numbers are doing okay. Would you get into it now, Sanjeev? Do you like this one?
No, Ajay, I
Okay.
am avoiding that.
Sure.
I have not tracked that stock and I am not getting into that, but I would stay with the larger place. The best place to be is HDFC Bank. It's got HDFC merged with it. You got everything on home and mortgages going there. The bank is now starting to move up. And if you want to be with the pedigree stocks, it's HDFC Bank. LIC Housing is another play and Canfin Homes. You can add that as a basket. But Ajay, दिल्ली में सर्दी हो गई है शुरू और अभी तो शादियों का माहौल है. You can't believe there is almost 2 hours jam now because there is constant flow of weddings. So imagine the spending on wedding and patterns and airports and hotels. That is going to be the real queue for the next few months.
Getting a lot of invitations. You're already invited to conferences across the country. But now the Shadi season has started. Yes, we were hearing. In fact, CAIT was speaking to us just a week back, and they were saying it's going to be another record year for spending related to weddings. And Indian weddings are serious affairs, right? Gravy trains, as they say. But I want to get back to some of the stocks which were doing well. Nuresh, sugar yesterday also saw big move. Irrespective of the shape and size. Would you latch on to sugar even now?
Yeah, so some of the names have not made a big move. So for the largest one, Balrampur Chini, it has given a breakout above that 450 mark after almost 12-15 months and has moved up to 470. Could go and scale up back to 530 levels, make a new all-time high. We've seen the smaller names do well. So something like Awadh Sugar gave a breakout and is back closer to 2022 highs. So a lot of other names have done well, but one could look at a basket of say Dalmia Bharat Sugar and Balrampur Chini. Dalmia Bharat just gave the first move yesterday, is yet to take out the 3-month high, came very close to it. So I would go with Dalmia Bharat Sugars and Balrampur Chini. Both look interesting. The rest of the names like Awadh, etc. have already moved up quite a bit, but these are the two spots where there is still upside left.
All right, fair enough. Meantime, Sanjeev, wanted to get in your thoughts, on the latest Jefferies equity strategy, and they've actually replaced Marico with Honasa and Maruti with Eicher. I know you said you don't actively track Honasa, so maybe if you don't want to comment on that, that's fine. But Maruti with Eicher, because they're talking about the two-wheeler demand growing faster than passenger vehicles over the next 2 years. Maybe your thoughts?
Yeah, so Avanne, I agree with them. We've had two-wheeler stocks lag. And, Hero Motors sold more motorcycles in the last month than it did in the last 3 months. In the last week, I would say, 10 days. So it's telling you that the agri income or the rural incomes are back. But sacrificing Maruti at the cost of Eicher may be a tactical play because of what, but I still remain overweight on Maruti. Maruti is the bread and butter which is going through all new shapes and sizes. You will not believe the type of order book they have. From 18 and 19 lakh cars, they are going to sell 35 lakh. They've got the order book. It is just a matter of execution. And now with supply chain also, not going more stabilizing, I still would put my money on Maruti for 12,000. Eicher and Hero and Bajaj are the three winners, but they are all hitting new highs. So either you chase new highs, which is a technical breakout, or you stay with Maruti. Either way, I would put both my money in both those stocks.
Point taken. On that note, Mr. Bhasin, we'll let you go. Thank you so much for making time and speaking with us. But one other stock which might be in focus today could be Supreme Industries, and that's because Nuvama met the management and they've come back quite positive. In fact, they've upgraded that counter as well. Let's go across to Sharad to get more details on this one. Hi, Sharad.
In focus, we are having Supreme Industries, and the stock, by the way, over the last 2 months has been on a flattish note, but over the last 6 months, the stock is up almost 50-odd%. Recent management meet was there from Nuvama, and they have stated that the company is poised to gain in because of the two factors, the increase in affordability and also in the volume revival. Now, they have also upgraded the stock to buy from hold, and the target price is set at 4,959 rupees per share. And important takeaways include that the company is confident of clocking more than 15% volume CAGR over the medium term despite having a high base. Also, the other segments are expected to return between 10 to 15% CAGR going ahead. An important commentary coming in, especially on the high margin business front, as they'll be focusing on value added products, where they have given a 17% plus EBITDA margin target and also post-tax, pre-tax ROC numbers of almost 25%. Lastly, they have also pointed out that they have increased the FY24 capex guidance, and now the guidance is coming for capex at almost 1,000 odd crore rupees, and this is coming in after the recent takeover, and the funding will happen from the internal accruals. So a strong guidance coming in, especially on the capex front and the value added portions ones for Supreme Industries.
Okay, Sharad, thanks so much for bringing that into perspective. But we also have Sandeep Sabharwal joining us on the show. And Sandeep, I wanted to begin by discussing the real estate sector. Every day we are hearing about new launches. They're coming in at very high prices. But more interestingly, they're getting lapped up very, very quickly. Do you think there is likely to be a bubble here soon, or just because it was so underperforming and underrated that it was due for a re-rating?
Yeah, so because real estate went through 10 years of downturn, so a few years of upturn was always on the cards, and that's what is getting reflected now. That said, the second part of your comment also is right, that we are now entering into valuation territories which are much higher than what possibly can sustain, because finally real estate demand at the upper end can only sustain for some time, and there's only limited demand for that. Now, launches were limited for a long time, and that led to the price uptick. Now, launch pipeline also is picking up. So we need to monitor it, but I would say that overall, as a space, the space will do well, but the valuations of many of these stocks already capture that.
All right. Meantime, Sandeep, wanted to also get in your thoughts then as to how you're reading into Cipla with respect to the kind of reaction we saw. Do you think that it was justified in yesterday's trade? And how are you looking at the long-term prospects? Is this a good buying opportunity?
So the exact impact of the restrictions, I have not been able to evaluate, but I think pharma stocks tend to be volatile around such FTA actions, and that is something which always is a concern for the pharma companies, that suddenly there are some restrictions which disrupts the entire projection, etc. So I would think that Cipla should still do well long term. Recent result trends have been good, but the impact of this move, that I have not specifically evaluated.
The other thing is, Sandeep, that we are seeing that today there were two brokerage notes and two strategy notes, Jefferies, wherein they have actually moved away from NBFCs into HDFC Bank and ICICI Pru Life. And then you also had a note coming in from, the Greed and Fear, Chris Wood, wherein he has reduced his weightage on Bajaj Finance. Do you think the best of the NBFC rally is behind, and probably it's a good time to look at insurance and other places as well?
Insurance companies, I don't think there's any big play, because the companies have disappointed continuously for years now. So there's nothing changed. And you cannot keep on changing your investment strategy so much as these brokerages keep on doing, where they keep on reacting to news and selling and buying stocks. So you have to preempt these moves. So obviously the risk in Bajaj Finance was evident to anyone who could see it, because they were growing so rapidly. And in segments where RBI was clearly flagging concerns. So I think we need to monitor their asset quality over the next couple of quarters to see whether the risk actually plays out or not. If the risk doesn't play out, then at some stage Bajaj Finance will become a buying opportunity. Near-term NBFC margins will come under pressure for sure. So most companies have indicated 10 to 15 basis point impact on margins. So that is something we'll see this quarter, next quarter, more so next quarter, I guess. But if we believe that rates are peaking out and we could see a more benign environment going forward over the next 2-3 years, then in such environments, normally NBFCs actually outperform. So I think we are in a flux sort of situation where we cannot categorically say that we should sell off all NBFCs and buy banks or anything. So I think it's something which we need to monitor closely and then take a view stock by stock.
Thoughts on that point? You briefly touched upon, Sandeep. Today, Chetan Aya also comes out with a note from Morgan saying that India could actually be the first one in Asia starting to see rate cuts next year. What are your thoughts on rate cut cycle?
So rate cut, Ajay, it looks tough to me given the kind of commentary which comes out from RBI because they seem to be stuck on this 4% inflation thing. And if for an economy like India to sustain 4% inflation becomes very tough given our structural inefficiencies and the food inflation, which is nearly 55% of the CPI basket, and where for that to remain below 4% is very tough. So I'm not sure where this entire rate cut argument is coming from, unless and until globally we start seeing a very sharp rate cut cycle, which also seems unlikely today. I think we should be happy that rates are where they are. I don't think the interest rates in India are restrictive for growth at this stage. The rate hike cycle has been very benign. When US 10-year bond yields were 1.5%, Indian 10-year bond yields were around 6.4%. When they went to 5%, we were still at 7.4%. So just a 1% uptick. I think things are pretty good in India, and I think we should be happy that if they remain the same way.
Sandeep, you must have seen the way yesterday all the chemical stocks have started moving in unison. In fact, some of the funds have started moving there as well. Destocking, etc. A lot of issues have been weighing on the chemical space for a long time. Are there any signs in your view that chemical space is kind of bottoming out or not yet?
Yeah, I don't think so. So what usually happens is that when the stocks get beaten down so much, like many of these stocks have fallen 50-60% from the top, they'll obviously be bounced back. But calling that a change in trend, I think, is a very dangerous thing because commodity demand is subdued. Huge capacities have been planned by companies and which are coming on stream at a time when prices are down. So normally we see this kind of commodity cycle go on across industry, and many of these companies actually will see much more depressed profit cycle for a long period of time, which most of the analysts are unable to fathom. They just look at what profits they deliver in 21, 22, and they think that it will come back. It's not going to come back anytime soon.
Point taken, but I wanted to also go across to Naresh and get a sense on the entire FMCG basket because slowly and steadily some of those stocks have managed to inch up, whether it's a Varun Beverages which is up 60% this year, Colgate which is up by 40%, Radico Khaitan is up 40%. In fact, Radico has launched some new pink vodka as well if anyone is interested. So that's one more trigger
back to
point.
Friday talk, huh?
It is Friday after all, right? And IDC too is up around 32%. And of course, we got those channel checks as well that the volume growth is actually picking up.
So ITC and, okay, fine. Now I see where you're going.
But let me take that the races you or you have something to add.
No, I have something to say. Look at Radico.
Yeah.
It's outperformed the entire space. Right from Som Distilleries to United Spirits to breweries, that stock is the best performing, almost 1500, knocking at 1500.
Yeah.
I would say the largest reason for this is innovation. Every month they have, some new product or the other. And bulk of them are doing well on the street. I mean,
and
if
you
you
tried them and you have
some of
feedback?
some of them yes, but this stock has really outperformed. Sandeep, how come Radico has got the the cocktail right for outperformance and numbers, and others are lagging there?
It's very tough to say. It's a company which I used to track many years back, but then left tracking because it never used to perform, and then after that it suddenly started performing. So I have no idea what's going on.
No problem.
Naresh, I also wanted to ask you the question on this FMCG basket. ITC, Colgate, Varun Beverages, and of course the Alco Bevs. What stands out to you on the charts?
So in terms of the choices now, the way Alco Beverages stocks have done, they've overdone in the short term. Say they could break out a lot more, but the space where the best risk reward now is in Hindustan Unilever. Now, if you look at HUL, the stock made a top around 2600 to 2500 post the COVID bottom, and it is still below those levels. So for the last 3 years plus, the returns have been zero for the stock. The stock was at 2500 back in October, also in 2021-22. Unlike the other names in the FMCG pack, HUL has done nothing. So out here, the risk reward is superb, wherein the risk is 2% and the upside is 15-20% going forward. So I would look at HUL as a bet which could be contra, and from here at 2500, 2520 could surprise on the upside. Then going into Alco Beverages, there is United Spirits, which has done nothing for a long period of time. The stock used to be 800 back in 2015, and today it is 1050. So 8 years, no great returns. The stock topped out in 2021 around 1000, went back to 750, and now for the last 4-5 months it has started sustaining above 1000. So this is a multi-year breakout which could surprise on the upside. So these are the two large names which look promising and are not in the radar. So these two names could surprise over the next few months.
Okay, point taken. As far as the consumption basket is concerned, those are the top takeaways coming in. Just taking a look at some of those big buzzers from yesterday as well. Kunal, HPCL was higher by 7%. You had a lot of these sugar names, including Praj Industries, and then Senco Gold. Would you be a buyer in any of these names?
So Senco Gold, I think is a recently listed name. Very limited history for the stock in terms of the prices. But yeah, I think in the last one to 2 months of the price patterns for Senco Gold, the stock has shown a lot of positivity, volumes, good momentum, good acceleration for itself every now and then. So maybe I'm expecting that this could be a near-term trend which could be emerging positively for the stock. HPCL, on the other hand, of course, it was on the back of some news flow. But you know, these OMC stocks, I think since last 1 month have gained very well for themselves. I think HPCL, IOC particularly, the stock which was almost at 88, 89 levels to 100 plus mark, I think has done reasonably well. There was a last 1 week, 1 week back, there was a minor correction for these OMC names, even for the likes of HPCL, where the stock corrected, I think 7% broadly from the previous swing highs. But then the stock has managed to recover almost, on a V-shape recovery, that 7% kind of a fall. I think that's a very strong sign that the beta nature of these stocks is changing. And I've always seen historically that whenever the beta nature of stocks changes within a trend which is emerging, that's a sign that a new trend is building up for these names.
All right. So the other stock to discuss is Sammy Hotels. Sandeep, the IPO of Sammy Hotels itself came at a stage when, say, the industry leaders have quadrupled from 75 to look at how this Indian Hotels has done. So there is one section of the market who believe that we are, if not late stage, but at least the middle stage in hospitality in this phase of the cycle. So this IPO Sammy Hotels came in slightly on the later side. So your thoughts on that? Where exactly are we on the hospitality cycle? And the other one, the main plank, IPO plank for this one was around 1800 crore debt, around 3000 crore MCAP on listing, and as debt reduction happens, the valuation could actually unlock. Have you looked at Sammy?
No, Sammy I haven't looked at, but
Okay.
overall on the hotels, hospitality space, I would still think that the cycle is on, and the especially both for big business hotels as well as premium as well as leisure hotels, the trend is positive. The room rates, occupancy, everything is moving up. More events are happening, which will add to profitability of these companies. And many of these companies realized during COVID terms that they have to keep some cost controls on so that profitability sustains. So many of these companies are focused on reduction of costs, reduction of debt, etc. I would think that the hotels industry is in a good sweet spot still. It should last for at least 2-3 years more, unless and until we go into a economic slowdown, which leads to a slowdown in expenditure, etc., which I don't see happening in the near term. So Indian hotels and Lemon Tree are two which we own, and I would think that I would still be positive on them.
Okay, point taken. There's also a note coming in on Zamata from Morgan Stanley, where they have a target price of 140, upside potential of around 20%. What's your take on this one, Zomato, and if you have a view on Honasa as well, Sandeep?
Zomato, near term, it's had a sharp uptick, so we need the price to stabilize. Trends from whatever the companies been reported are positive, as should have been in a duopoly. That ultimately profitability improvement should have come, and that started to come now. So I think Zomato should be on the radar of investors whenever opportunities come. Right now at these prices, it looks a bit stretched. And Honasa, I don't think they have any long-term strategic advantage which will sustain profitability. I think one or two quarter here and there post IPO results shouldn't excite people. Let's see the trend over the next few quarters, how growth sustains, how margins sustain, then we'll take a view.
There's another stock, a small stock in focus is Jindel Stainless. Jindel Stainless has released pledge. Pull up the chart, 1 year chart of it has done pretty well, more than double, in fact tripled in the last 1 year. Jindel Stainless will come up on your screen, 525. Nuresh, have you looked at this one?
The stock has been an outperformer for a long time after being in a rut for a period of 2016 to 2019-20. Now the trend is pretty strong. The stock has made some bit of a consolidation in the last 3-4 months, but the trend still remains strong. A fresh move could start above 540, 545 levels, wherein it could go again towards 620, 650. So the trend is strong. A trailing stop loss would be at 500.
Okay, fair enough. Meantime, let's also get in a take then on some of the other stocks that are on the brokerage radar. And you've got Supreme Industries that's on Nuvama's radar. They say that the company is confident of a 15% plus CAGR growth over the medium term, and focus on value added will drive margins down the line. They've upgraded the stock to a buy from hold. And you've got that stock which is in the spotlight. Along with that, Zamata, as Morgan Stanley has an overweight rating with an upside potential of nearly 21%, saying that there's upside after the strong outperformance, and quick commerce as well could surprise on the upside. We'll get in a view on those two stocks, but it's 9 a.m. So a quick check-in as to what the initial pre-open rates are reflecting. And for now, it's quiet. So yet again, on the index level, looks like it may pan out to be a pretty boring or dull day of trade at 19,784 for now. So sub the 19,800 mark. And for the Sensex, just about finding its feet around the 66,000 mark. But let's get in those mid-cap trading calls going as well. And Naresh, what is it that you're flagging off for the day?
So that's about Snowman Logistics. The stock saw a very huge volume and price bump up yesterday. Has given a breakout of the last 2 years, a good formation here, and the whole sector looks promising. So would expect some follow-up action over the next few sessions. Stop loss at 55 and a target price of 70.
Okay, Kunal, let's get your top trading call going from the broader universe.
There'll be a buy on Warren Beverages. The stock yesterday gave a fresh breakout. Good volumes, decent volumes for the stock in yesterday's up move. So would suggest a buy. 1100 as a target. Stop loss at 1050.
Okay, point taken. So those were the top mid-cap recommendations coming in from our charters, but let's bring you up to speed as to what's happening across the globe as well. It's the Dutch elections which are in focus, and the far-right leader, Geert Wilders, sends shockwaves through the European political leadership, leading his party to a decisive victory in the Netherlands general election. Uncertainty, however, remains whether he will be able to form a coalition with the parties, because they had earlier vowed not to work with him. So let's see how that really pans out. But shifting focus to what's happening in Dublin as well. 3 young children were among the 5 people injured in a knife attack in Dublin that sparked riots between police and anti-immigrant protesters. Police have not yet ruled out any motive, including terror. Public transportation has been suspended there, and patients have been advised not to travel unless necessary. You also have something coming in from the world of sports, and tennis star Novak Djokovic has created history as he took Serbia to yet another Davis Cup final. It was the record 44th Davis Cup match win coming in for Novak. With this win, he has become one of the most successful Serbian players in the history of the Davis Cup.
Meantime, staying with the world of sport, Suryakumar Yadav led India, defeated Australia in the high-scoring T20 International. Australia's Josh English smashed a fiery ton, setting India a mammoth target of 209. Suryakumar Yadav and Ishan Kishan's fiery innings clearly helped India chase down the target with a ball to spare. And meantime, the operations for the rescue of the 41 workers have been put on hold after the auger drilling machine ran into a technical snag. The rescuers hope that the drill will happen through the debris today and help pull the workers out with the help of wheel stretchers that have been tied to the ropes. And no respite for Delhiites. The air quality continues to remain very poor. It is in the dangerously close to severe category. Ophthalmologists in Delhi have also said that there are an increasing number of patients with eye-related problems. And additionally, Kolkata is also battling poor air quality, sparking health concerns.
So let's move ahead and talk about juicy gossip from dealing room. Sharad is joining us with some stocks he's been talking about with his friends in the dealing room. Sharad, what's the stock on your radar today?
Well, yes, the khabar on Archean Chemicals is that two important bromine derivative products are expected to be launched after the month of December. Now, the expected margins from these products ranges between 20 to 25%, and also importantly, the company recently actually signed a very large salt offtake order coming in from premium rates. And also, channel checks suggest that the company is in the mood to close the entire process of extending their 30-year lease for their land. So this is a developing story on that. And recently there was a con call by the management also, and they have stated that the second half of the current fiscal year will have stronger volumes for their products. And importantly, the company has given a guidance of almost 35 to 40% on an overall EBITDA margin level basis. And they expect that because of backward integration, especially in the bromine derivative product segment, these margins are expected to go up as well as the focus goes on the value-added products.
Okay, Sharad, we'll keep that stock on our radar. But what is on radar of Ajay Srivastava? Because he's talking about the QSR sector as well as some of the new age tech companies. Listen into his views.
The competition from cloud kitchen is enormous. Nobody wants to go out and eat at a McDonald's. Maybe a kid once wants to eat it. At the end of the day, you don't eat at a Pizza Hut. You got so many gourmet pizzas available. I think those people have lost the plot in India at this point of time, number one. Number two is the overestimation of market. In a country where almost 60-70% of people need to be fed food grains free of cost to survive, how big is your market for the QSR? And look at the pricing of those products. When they were cheap, they were good. When you price them the way they're priced today, you're taking it out of budget for a whole amount of the community of India and the consumers of India. So I think they were a darling at one time because one, they promised that we'll access a large market. The pricing base of the products was much more cheaper than what it is today. With today's prices, they have narrowed down their customer bucket, and that is showing up. Cloud kitchen on top, home delivery on top, their goose has been cooked. I don't think there's a great future there for a long time to come, given the fact they compete for retail space in malls, which is expensive. At the end of the day, the retail expensive, the maintenance cost expensive, people cost expensive. So they have a troubled life, I think, in the next couple of years because the cost is working against them. The consumer dynamics is working against them. They're fighting a consumer trend on a higher cost base. And that's why I think they will continue to underperform. We have told our team that in the matter of, we should have more than 50 to 60% investment money in companies which are less than 3 to 4 years on the bourses. I think that's the more important one. There's so many new themes coming out in the market. These have got new age ability to harness large number of customers at a very short cost base, don't need to physically expand. So, it is given that if you're not having in a portfolio these new age companies, I think you're missing out on the big ride in the market. You want to allocate still to the cement stock or HDFC Bank, you can do at your own risk. That's really not the way you're going to invest in the next year. I would still recommend new age has also come with monopolies. If you see whether it's payment systems, food delivery companies, advertising companies, lounge companies, you name tech companies, defense companies, all of them are in semi-monopoly or monopoly status. And this can't be built over time. The cash burn is by and large over at this point of time. Most are at least EBITDA positive. So you're really coming in at a time, yes, they have run up quite a bit. To be fair, most have doubled in the last 6 months or so. So you go to pay your investments. But if you don't have more than 50% of your investment in new age companies, I think you'll do injustice to your portfolio.
All right, that's Ajay Srivastava's take. Just a few minutes to go and the markets will open. So what exactly is it that our chartists are advising by way of positions on the Nifty and the Nifty Bank? It's a unanimous hold call. All three of our chartists are saying that it's a hold on the index. Do remember, it's been nothing short of consolidation mode for the markets. And if the pre-open rates are anything to go by, we're perhaps in for another very range-bound day of trade. Barring Santosh Meena, who has a buy call on the Nifty Bank, Kunal as well as Naresh tilting towards a hold recommendation. Yes, we did see a bit of a recovery within the banks yesterday. It's a hold call. That's the market modometer.
Kunal, yesterday we saw Piramal Pharma make a very decisive move. Today also in pre-open it is looking to open in the green at least. What's next for Piramal Pharma in terms of levels?
So I think next in terms of levels is so the rally started off from 90 levels, 91 levels for Piramal Pharma. I think a month back, the stock moved up to 120. That was like an unabated rally for the stock, and that's where the first phase of consolidation or mild time-wise correction came in for the stock price. Which means what you're looking out for is almost a 30%, 33% rally for the stock in the last 1 month. Now from that, we look out for at least a modest 50% of the rally which has happened as the next leg of target on the upside, which means from 120 to another 15 rupees, 16 rupees on the upside. 136 is what we could be looking out for as a near-term target for Piramal Pharma.
Nuresh, yesterday we also saw a stock called Man Infra shoot up in trade. Was that up move backed by volumes? And today again it's looking slightly flattish, but is the follow-up buying, was it a breakout in the first place, Nuresh?
Yeah, so the stock gapped up with large volumes on the back of the announcement, which was about a new fundraise. The stock has hit one of the highest volumes in the last almost 2 years. The breakout is done for the last 3-4 months of consolidation. It's just that with the gap up, wherein the stock used to be 160 a day before and you're at 177, the risk reward is off. But any fade off towards 165 to 170 zone should be a buying opportunity. The whole sector also, the real estate and infra pack is doing well. So out here, one should wait for a dip to get into the stock.
Fair enough. Meantime, let's also understand the view, Kunal, just to revisit what's going on within some of the private sector banks. And looks like the likes of an HDFC Bank are coming back into favor now. Do you believe that it's a good time to nibble into the stock at the current levels of about 1550, or one has missed the bus?
No, I think it could be a good time to enter into the stock at current levels. But of course, your time horizon has to be a bit elongated over here. The only reason why I would believe that the stocks may take some bit of more time, because we are not seeing evidence of short covering. So, for example, just to give a relative example, like what we saw for chemical stocks, what we saw for IT names, large cap IT stocks in the last 10-15 days, there was a slew of short covering, which led into the first 5-7% strong rally for these stocks. And then starts off a trend for many of these names. That's missing for these private sector banking stocks, whether it's HDFC Bank, Kotak Bank or ICICI Bank. And that's why I would probably believe that it could be very slow, gradual, unless short covering kicks in and then intensifies the rally.
Just wanted to, since we were talking a lot about these OMCs, what exactly are the charts indicating, Kunal, in terms of an HPBP for the long haul? Do you think that this run-up that we have seen so far is looking sustainable?
Well, I would not look out for too long-term over here. I know these stocks have a lot of seasonality factor in terms of, or cyclical factors, where these stocks rally up 10-15%, 20% in a certain kind of a trend, and then comes a major pause or a consolidation for these stocks. I think that's the biggest hindrance for many of these OMC names. Yes, these stocks have given a breakout on the short-term charts, but I would probably expect another 5% to 10% swing on the upside. That's best, for a short-term trader.
So that's the latest coming in on the OMCs, but just taking stock of the buzzers in the pre-open, it seems like pharma is the sector which is going to lead from the front today. You have names like Lupin and Cipla, which are seeing a bit of a bounce back after the kind of drop that we saw yesterday. Realty is expected to continue the momentum. Prestige, on account of that new launch, is likely to open with a gain of almost 1%. We will get the management to talk to us about this launch as well as what it means for the company. You also have Mahindra Life as well as Lodha, which is doing well. Public sector banks also deserve mention. Union Bank is expected to be higher by around 1% to begin the trading session. Just taking stock of some of the other movers as well, Bajaj Finance is likely to open in the green. However, on the losing side, it continues to be IT, which is sluggish. So TCS and Infosys might be in the red as we start the trading session. Broader markets, not much movers, to be honest. There's a Radico, which is showing signs of green. V-Mart, Sterling Wilson Solar, and from broader markets, names like Kesoram, etc. Are in focus. In fact, from the entire cement pack, Kunal, is there any name that stands out for you? And quickly, because we've just left 1 minute in the trading session to start.
Well, not too much, Anisha. I think except for Ultratech Cement, there is hardly, and maybe Dalmia Bharat to a larger extent, there are hardly any major trends which are, pucking up into the cement stocks. ACC, Ambuja, etc. These stocks have been more sideways. India Cement has been extremely high beta and volatile. So I would probably prefer only Ultratech Cement.
Okay, point taken. On that note, Kunal, we let you go. Thanks so much for making time. What else is happening in the market right now? Well, it looks like it's going to be a very, very soft start. Yes, a marginal green is what we are witnessing, but nothing to really talk about. Axis Bank, of course, is going to be in focus on account of that analyst day that they had. 18% ROE is something that they're calling sustainable. But let's see whether the rally from yesterday continues in spaces like sugar, because yesterday it wasn't a sugar high, but was it a one-day move? Or is it going to continue? Is something that we'll have to watch out for. That entire, request coming in from the NBFC sector that RBI should probably relook at their risk weightage is something that might keep that sector in focus. So we'll watch out for that, because the banking index was making a bit of a recovery yesterday, whether that momentum is continuing or not. Because finally, Ajay, it seems like that the FII buying is coming back. And I guess that is something that will support the index as well. Okay, opening rates coming for you. The index is starting mildly in the green, 90,821 for the index. But what is really smart is the advanced decline ratio. Again, it's the broader markets which are outperforming. There are almost 11 to 1200 stocks advancing versus 200 declining. And that tells you the strength that we are witnessing in the broader markets right now. Sectorally speaking, as we pointed out, it's Pharma which is leading from the front. So a Lupin, a Cipla, Sanofi, these are your top gainers. And then real estate names like Prestige and Mahindra Life are also doing okay. What's on the back foot, if at all, is only IT, but that too just a smidge of red if we have that on the screen. But other than that, it seems like a good opening for the market. Within the broader market, watch out for Affle. That's higher on account of those 10 IPs that they had submitted. Cipla is bouncing back. You have Radico Khaitan in focus. And then, of course, other stocks like Supreme Industries. And also take a look at Honasa. Is that momentum from yesterday continuing on that one? Because Paytm, for instance, is down 4%. But has Honasa managed to continue the up move? That could be an interesting one to watch out for. But OMCs is also something. Okay, so another 12% move on Honasa. That definitely is something which is gaining ground. And OMCs also, let's take a look. HPCL is retracing a bit after that 7% move. And the other ones are also somber. So it's not like a very, very roaring move at the index level. Again, it's very quiet, but individual names is where the party is.
Yes, I would say, some